It seems everyone wants to buy gold today with the rand hitting 14 rand to the dollar and the China markets really putting the currency into turmoil. And we're with Dr. Dolf de Roos from New Zealand, who's the president of Wealth Migrate, and really looks at how property is an interesting choice for investing as opposed to all these other equities and all the other options. So Dolf, let's just start off with China and what's happened in the last day. What's happening and what insights and comments do you have about it?
Well, firstly, everyone knows that the Chinese currency has fallen. They've had a government-mandated devaluation of their currency. Not unexpected. Their economy has lost some of its gloss. It was booming for a long time. Annual growth, year after year, of 8%. That is huge, and it kind of wasn't sustainable. So now they want to make their exports more affordable to foreigners, so the government decided to lower the currency. Now, they've got a fixed exchange rate, and many countries in the past had that, including South Africa at one stage, New Zealand and Australia certainly did. But we got wise and realized that it's far better to let market forces determine the value of your currency, and I predict that one day China will do the same. But in the meantime, because they're still largely controlled by their government, they determine what the exchange rate is. Well, with the fall-off in their currency and the realization that their economy isn't doing well, and the fact that China buys so many products from other countries, raw materials, minerals and that sort of thing, especially from here in South Africa, it's having a flow-on effect. And I think that's partially what's accelerated the fall in the rand. I know it's at all-time records now, which is scary for everyone here, but it wasn't the only cause of that drop-off. The rand has been falling almost consistently year after year, and that of itself is room for concern.
Now, obviously, the rand has always been falling, and this is really putting even more fear into the market. Where does property fit into all of this, both locally and globally?
Well, it's a very interesting concept, and it's one that we could spend a day discussing. But in essence, when you've got inflation, when you've got a decrease in the value of money, and therefore prices go up, most things that you can own, that you can invest in, you're worse off with those because the value of those has gone down as well. But most people, when they buy a property, they use a mortgage. So let's use round numbers. Let's say you buy a property for a million rand, but you've got a mortgage of 900,000, just to keep it simple. If the value of money goes down and there's hyperinflation and suddenly that property costs 10 million rand, to be ridiculous, with most other assets that would be a problem, but with property, because you had a $900,000 mortgage, assuming you haven't paid any of the mortgage off, you've still only got a 900,000 mortgage, but your real estate is now worth 10 million. So in essence, you've made that difference. And that's something that's not always as easy to do with other investments. And that's just if you invest in South Africa. Now, if that had been the situation and it was worth 10 million rand, the rand would have been worth a lot less, but you're still ahead. But now you get the situation, this is where it gets really interesting. If a South African were to invest overseas, then suddenly not only have they got that increase in value to the extent that that is so in the foreign country, and just as a disclaimer, sometimes properties go down, but in the long time they go up. But now you've also got the benefit of a stronger currency. So there's a double win. And I know some people might react to that by saying, but aren't you being seditious by taking your money overseas? Shouldn't you invest locally? And the irony, Matthew, is that those people who invest overseas are actually serving their own country better than the very critics who would tell them not to go, because ultimately you're bringing that rental income and then the capital profits back to your own country.
If real estate is so simple, why aren't more people doing it?
Well, that's a loaded question. I have my personal theory, and that is that there are a lot of financial planners out there, and they're all trying to earn a living for their families, and they're probably doing good in most forms of the word. But financial planners have not yet figured out a way of earning money when they tip their clients into property. So they've got an incentive to put them into shares and bonds and stocks and certificates of deposit and treasury bills because they earn a commission, an entry commission, a switching commission, a trailing commission. They haven't yet figured out a way of earning that commission. I think that's part of it. Secondly, it's just sometimes because of an incomplete understanding.